I have seen people struggling with long-term capital gain on the sale of property. However, you have to take into account two very important sections that provide insights in this matter. That is Section 54 and Section 54F of the Income Tax Act. Section 54 provides for exemption in the matter of long-term capital gain that has arisen from the sale of residential property. And here you can invest the entire long-term capital gain into a new residential property to get the exemption. However, you have to take into account that the new residential property you have to purchase 1 year before or 2 years after the sale of residential property from where your capital gain has arisen. And in fact, in Section 54, there is a one-time lifetime provision of investing in up to 2 residential properties. However, for that, the total long-term capital gain should be less than 2 crore rupees. However, Section 54F deals with long-term capital gain that has arisen from the sale of any other capital asset rather than the residential property. That is land, building, stocks, jewelry, patent, trademarks, any capital asset except the residential property. Here you have to invest the entire sale consideration into a new residential property to claim the exemption. And you have to take into account the same thing, the same condition that we have discussed in Section 54, that is the new property should be purchased 1 year before or 2 years after the sale of capital asset from where the capital tax has arisen, capital gains has arisen. Further, one more condition that you cannot possess more than one residential property other than the new residential property to claim exemption under Section 54F. Check for captions for more details.